Good morning. So today we're looking at HMC Capital, HMC. Here's their website. So how do you assess a company in terms of whether or not you're going to choose to invest in it? Well, pretty much the same way you assess anything. While you're looking at this website, what are you thinking? What I'm thinking is, this is pretty schmick. These people want to make a good impression, and they seem to have found a way of doing it. So that's understandable, because HM Capital is an investment company. So they want punters to trust them with their money. How do you research a company? Well, one of the fundamental ideas behind BuyPoint ASX is that you, as an average punter, should give up trying to research ASX 300 companies. There are many places you can go to find relatively expert opinion about any company that you're interested in. More to the point, what you see when you start reading this and watching this stuff is that everyone who is making a living out of giving advice about investment is very quick to tell you they're probably wrong. So partly what this is about is learning to trust your own judgment, because it's only your judgment that is ultimately important, because you're going to make the decisions unless you decide to let other people make the decisions. For me, Google is a simple resource with which you can locate a lot of information about any ASX 300 company, and it's pretty easy to see that the general coverage of HMC is pretty positive. So what can you do to assess a company when you're looking at it? Start from the very beginning. Here are the fundamentals. So this is a $4 billion company. Again, a pretty fundamental element of the approach of BuyPoint ASX is that if you restrict your investing to companies that are worth more than $1 billion, the odds of you waking up one morning to find that the company has evaporated are significantly reduced. As to price to earnings ratios, all that sort of thing, this is something that you have to assess company by company, because the significance of a price to earnings ratio is going to vary from one company to another. You can see what you can see. There's not a big dividend. They are an investment company, real estate, private equity, energy transition, digital infrastructure. How much does that tell you? Not a lot. Here are the financials. So you can see that the company is fairly young. It's making some money, but more significantly, as it is an investment company, it's making a return on its investment. So it's doing something right. Here is the, let's call it, long-term chart of the company, and you can see that the company has only been in operation for 5 years. There is an inherent risk in investing in young companies, because nobody really knows that much about the company until it has a long history of performance. The exception to that, of course, is that relatively large companies can be created overnight on the basis of other longer term companies being brought in. If you go and have a look at the coverage of HMC, what you'll see is that they recently acquired HMC Capital. Some of you might know that name, because some of you might have been Peyton's clients. The point is, it is a young company, but 5 years is 5 years, and we have 5 years history upon which to base our judgments. Here is the primary tool that we are using in assessing a buy point. The MACD, moving average convergence divergence. So what you see is the typical pattern of price action on a stock, which indicates a great time to buy. The stock has been rising consistently for a couple of years, a surging growth of the price takes it up to about $12.50, and then a precipitous fall. The precipitous fall is becoming a theme of buy point ASX, in that what this does typically is to create an optimal buy point if you're looking at getting into a company. What buy point ASX is about is not suggesting that you invest in companies simply because they're at a buy point. What we're talking about is watching companies that you're interested in and waiting until the perfect moment to invest in them arrives, waiting for a buy point to manifest. And what we're looking for is this point right here, the point at which the blue longer term exponential moving average line is going to cross above the orange shorter term exponential moving average line in an upward direction. Now, this isn't an absolutely textbook example of a buy point, because it is more likely to result in an increase in the price if there is a definite upwards trend to the lines. But the point is, if a company's value drops from $12 to below $10 overnight, the chances are that's an overreaction, primarily generated by automated trading bots, and the chances are there's an opportunity here to get into a good stock at a relatively low price. The question some people might have is, why did the price drop from over $12 to under $10, a drop of something like 15% overnight? Well, this is the question you have to ask yourself as a retail investor. Do you care? Do you have time to find out? Probably the way to find out is, as I've indicated before, go back to Google, or you can go into the announcements page to see what happened at around that time on the 12th of December that might have caused the price to drop. All we see when we look is that on the 11th of December there was an announcement of a change in substantial holdings. When we look at the notice, what do we see? We see that these investment experts chose to invest heavily in Lifestyle Communities LIC, and if you've been watching this series, you might know why. That's it for today. Have a great day. I'll see you tomorrow. Bye for now.